It's 2025, January. We're kicking off the year with another market update for the city of Austin. I'm David Shapiro, my colleague Lee Abraham here at the Shapiro Group. And let's dive in and start showing you some of the stats here and what we're seeing locally here in the market. I'm sure you're eager to know, is 2025 going to look like 2024, or is the real estate market going to pick up? What's going to happen? Well, let's start with the number of active listings. Huge change here. You can see that over the holidays, lots of listings came off the market, whether listings expired or they were withdrawn. Not very many new listings going on because of seasonality. People, it's kind of like a cyclical thing where people don't want to deal with moving during the holidays. They're traveling, they're busy with other things. Other people know that's happening, so they don't list. And so that's how we end up with just such low inventory, number of active listings in January. And you can look at previous years, what that usually looks like. So this is not abnormal. This is generally what things are looking like in January and February as well. And then it starts to pick up March, April, May. And so I would not expect anything different this year.
Yeah, so we have just over 1,900 active listings, David. And as we try to make sense of what does that mean to our buyers and sellers, as well as our investors, we look at the monthly housing inventory. So interestingly, for the first time in quite some time, the number of pending sales over the past 30 days, essentially the month of December, lower than the number of closed sales. And so for the first time in a long time, the 30-day pending number shows just over 3.5-month inventory. But based on the closed sales, it's just over 3 months. And so we know that a balanced inventory is somewhere between 6.5 months. If we were strictly looking at these numbers, we'd definitely be saying that the Austin housing market is beginning 2025 quite strong as compared to some of the previous months.
Yeah. And I think this is that lock-in effect again, right? People are not listing because they have these great low interest rates. I hear it from clients all the time. Well, we're going to move, but we don't want to give up our 3% interest rate. What do you think we should do? Should we just turn it into a rental? So there's more of that happening and less inventory coming online. And of course, the seasonality that we talked about. So here's the 30-day housing inventory over time. And again, it kind of follows a similar path to what we were just looking at. Usually peaks around the last couple of years, around 5 months of inventory, and then comes back down. Usually the lowest point here is in the summer when things are heating up and there's the most buyer activity. And so we'll see if that maintains and we have enough buyer demand side activity, as we know that supply is going to pick up here in the spring. We know there's people waiting to list their homes. They wanted to get through the holidays, and so those listings are going to come online. We know that people are waiting for interest rates to come down. And we have an interesting article I can share about that. Here's an article from Fannie Mae, and I think the important part is looking at this chart. It's consumer sentiment is what they're tracking. And so you can go back to 2019, end of 2019, really high consumer sentiment. And of course, pandemic hits, all of a sudden, very briefly, people are not as excited about buying a home, but that comes back. And that sentiment is pretty solid until interest rates start getting hiked. You can see what months we're in. So end of 21, going into 22, starts to hike interest rates and sentiment comes down, bottoms in the 50s. And it's been on a trajectory since then, moving up. People are getting more optimistic. And now we're sitting at 75, not that far from the 81 that we were sitting at in 2020 and 2021 when the market was red hot. So I think people are waiting for those lower interest rates. I don't know if we're going to get them to the extent that we were hoping for in 2025. At this point, it's not looking that way, but we don't know. We got a whole year ahead of us, so things can change. But very interesting to see this is trending upward, and we're really not that far from the sentiment that we were when the market was really hot.
Yeah, I think one thing to keep in mind also is those are national statistics, and it's good to see the rest of the country's market improving and, on the right trend. Obviously, that will have some impact on what's happening in our Austin market as well.
Yeah. And, I keep coming back to it. It is interesting that Austin has not performed over the last 2 years like parts of the rest of the country, which, you hear anecdotes of, multiple offer situations and inventory really tight and other markets just really booming still. And that not being the case in the majority of Austin. There are pockets where there's just not that many really nice, well priced homes, and those ones go quickly. But what's different? We did build a lot in Austin. We have a little bit of a, it is difficult to build in Austin compared to other parts of Texas, but easier than some of our peer cities that people are thinking about moving from, like in California or in New York. I think that, we have seen that, decrease in demand and increase in supply because of that. But fundamentally, the market is really strong in Texas. Long term, we have a lot of job growth. All the things and all the reasons that people were moving to Austin are still the same. Like those things still hold true. And so it's just a matter of time before this turns back around and we get back to where we were, maybe not 2021 type levels, but back to like 2019 type activity.
And so one of the real drivers of the supply demand dynamic is obviously the number of sales. And guess what? The number of sales are up year over year, double digits, 11%, and right at about double digits, 9.6% month over month. So it's kind of interesting, David, when you take a look at number of sales being up in December. To me, it's kind of a continuation of the theme we were discussing last month, which is pent up demand. I see that there's some opportunities being seized by some proactive consumers in terms of the number of sales, and I think it bodes well for the rest of this first quarter, certainly.
Yeah, I mean, there's lots of people that have had a change in life events. They've had another kid or something else that's forcing them that they need to go buy a different property, a different house, and they've just been waiting and trying to hold on, but they can only do that so long. And so those things are still happening, and there's definitely a lot of pent up demand. I feel like once we see rates come down a little bit, that dam is going to burst, and we're going to see a lot of activity. Here we can see the average sales price is up year over year and also up month over month. Wow, what a, generally we're not seeing those types of price jumps in December. Interesting to see. I mean, the one thing I keep coming back to is that price, even though activity is down, the number of sales that are happening, homeowners, they have retained value in their homes quite well. Maybe not if they bought at the absolute peak, but anybody who bought in 2021 or prior should have equity in their home, and we've been holding pretty strong. So that's good to see.
I think it's great to see, and I think it aligns perfectly with the number of sales. And we're starting to see a little bit of a trend that is holding true to our forecasts over the past several months. Days to sell, David, up year over year, just a little bit, but down month to month, hovering right at around 70 days. We'll keep an eye on this, but overall, it's kind of a reflection of a moderating market. No real impact at this time in terms of the price dynamic.
New listings down 6% year over year, down 32% month to month. This is an interesting trend that even though sales were actually up, we saw that in the inventory numbers, right? Because sales were up, listings are down, and so inventory is actually quite low in the scheme of what things have looked like over the last 2 years. So interesting to see listings down. Just maybe we could bounce some ideas here, which is like people are kind of fed up with their listing just sitting, and they're like, well, let's just pull it off the market. Like, I'm not going to list it right away. They're not as hopeful about it selling for the price they need. And I think people will sometimes make comparisons to 2008. What's different about now is that everybody who wants a job has a job. That was not the case in 2008, and people were forced to sell because they were losing their jobs. So that seems to be holding up. Lots of job growth in Texas. Things are going well. Hard to imagine that we're going to see any sort of huge layoffs in the next year. The Fed is watching that very carefully. And if they were to see that, they would lower interest rates to help spur the economy. And then it would make housing more affordable and actually help the housing market. One thing that's counterintuitive is that a recession is actually good for the housing market, because a recession means that the Fed is going to lower interest rates. So one thing to keep in mind is that if things are going fine for you now, if a recession comes with housing, it should only boost values and increase activity.
David, one thing that I'd like to just mention on this particular slide is a note to our prospective sellers out there, folks that own a home, maybe multiple homes, maybe investment property. They've been on the sidelines, concerned about the soft market, concerned about the number of transactions. Does it make sense to list their home for sale? And these statistics that we've been going over in this report are indicating to me that it's time for the potential sellers out there to take a real good look at possibly getting their home on the market in the next couple of months. And if that's the case, there may be a significant price boost that our sellers will enjoy based on what we're forecasting to be increased effective demand and a very limited supply. So the best time to compete is when the competition is weak, if you can time that. And in this particular case, I think that sellers have an opportunity to put their best foot forward here in January, February, and get quote unquote top dollar for their home as compared to what we've been able to do perhaps over the past year and a half, maybe even 2 years.
Lee, I mean, I don't know. Should they even wait a couple months? I mean, if you look here where the number of listings are generally in like January, February, like why wait until early summer or late spring when there's more listings to
Right.
compete with? I think if it was me, I'd have my listing on the market next week and just, try to be there while people are coming off the new year. They've set new goals. I see this every year. They were like, had a goal of buying a house in 2024. It didn't work out. They're like, it's 2025 is our year, and the market generally picks up with demand early in the year. And so trying to capture that, I mean, I wouldn't wait if I was a seller and I was thinking of selling in March, like just get it on the market now if you can. Now, there's obviously life stuff that might impede, but if possible. All right. So we talked about new listings. Let's talk about sale price, list price ratio, Lee.
Well, it's pretty darn stable, David. Up a little bit year over year, down a little bit month to month, hovering at 96.5%. We've parsed this number out a lot of different ways over the past several years of doing these reports. And right now, it's not telling me anything contradictory to the discussion we've had up to this point in this report. So just a stable indicator for this report.
Okay, cool. And then our listing inventory barometer, trying to get real time with the stats here. We got some changes to it. Lee, you want to go over what's different
Well,
this month?
basically what we did, David, is we just added another column, which is highlighted in red, and that's just showing the math. So, for example, in the most recent week on the chart, the final week of December, there were 45 new listings, 70 pending sales. That means that there was a net decrease of 25 listings from the beginning of the week to the end of the week. More listings sold than came to the market. So that gave us a barometer percentage of 64%. And so that's been really interesting number. And during the pandemic was when, I came up with that statistic to kind of measure real time supply demand. It's been extremely helpful. But over the past 8, 9 months, David, the impact of expired and withdrawn listings has become very, very significant, and I think extremely impactful on why prices have been steady here in the market and why the inventory has been dropping.
Make a point on that. Like if you think about what was happening in 2021, every house was selling, right? Like, and okay, maybe I'm being a little bit hyperbolic. Not every house, but the majority were selling and quickly. And so there just weren't that many listings that were expiring. Like where the listing, what that means is the agreement between the seller and their agent actually expired before the house sold. Like that wasn't happening because things were selling pretty quickly. And then withdrawns is where they, that didn't expire, but they're just pulling it off the market for whatever reason. So that just wasn't, maybe they didn't get the number they wanted or their circumstances changed. So some of that still happens, or was still happening, but not to the extent it is now where people sign a 1-year agreement and a year passes and they still haven't sold the house. And so it gets expired. So this has just become much more significant, as Lee was saying. So I'll let you continue there, Lee.
Yeah, so we're just doing the math for you here and showing that the inventory has been shrinking And not just that it's been shrinking, but why it's been shrinking. So if you go to the next slide, it really bears out just a data visualization of the point where on the left, you're looking at the net gain or loss in any given week, just looking at new listings and pending sales. And that's this barometer numbers. And based on that, you just anecdotally look at it and go, my gosh, it looks like the inventory is growing pretty substantially. But when you factor in the expires and withdrawals that are in the bar chart to the right, which is the absolute net growth or retraction, you can see that that is just not the case. And it's just bearing out what's happening and when the market has been shrinking. And it's just kind of interesting to look at it from this perspective, David.
Yeah, definitely. I'm glad you dug in and found this because this is definitely helpful. And I don't think anybody's talking about this.
Just us here at the Shapiro Group, David.
All right. So we got and curious if anybody has questions on this, go ahead and just respond in the comments. We've been pretty good about responding to most comments. So feel free to ask questions about this, or if you're seeing something different in the market, like, we love hearing about anecdotes from people on what they're seeing out there and trying to help gather, seeing how the stats kind of create the story that is actually out there, what you actually are seeing in the market. So we love for you to comment or shoot us an email or a text and let us know what's going on. Of course, if you have any questions about listing your house or you're thinking about buying a property, we'd love to chat with you about that and see if we can figure out if your goals are aligned with us being able to help you make that happen. So let's talk about mortgage rates. I think this is the big thing. I thought by now we would have seen some lower mortgage rates. The Fed has seemed to execute the perfect soft landing where they haven't needed to lower rates significantly, which is so challenging. I thought they were going to overshoot for sure. And here we are with fewer rate drops than we expected. And of course, it's not really impacting the 30-year fixed rate mortgages the way we were expecting either. Lee, what are your thoughts here?
Well, as long as we're under 7, everything in our forecasts, I think, are going to hold true. And, the range over the past year has been just over 7, 7.2. So again, I'm just going to stick with the simple math. As long as we're under 7, I think we're going to be stable. I'm not looking for a big decrease, David, in the 30-year fixed rate in 2025. It may dip down just a little bit, but I think those days are over. I don't see us getting back to anything like that 3%, 4% sort of number that you were referencing earlier. Yeah,
I mean,
I think.
well, ever?
Well, ever's a relative phenomenon, and
Here's
depending on your age and everything else, what does that mean? All I'm saying is that for making decisions on should I buy, should I sell, if a dramatic decrease in interest rates is going to signal you to move forward, you're probably not going to be moving forward in the next, I'm going to say, several years. That's going to be my
interesting.
forecast.
Okay. Yeah. So, all right. Basically, you're saying if somebody needs to buy for lifestyle reasons, like there's no reason to wait 1 year or 2 years, like they're not going to see some significant difference. And of course, we'll reiterate if you do see that, you have the option to refi.
Right.
Like that's the beautiful thing about
Right.
the way that the whole mortgage market works. I'll say that in 2012, I got a 3% mortgage and I thought, holy smokes, this is never going to happen again. I am never selling this property. And, 8 years later, 2020 hits and, we saw mortgage rates that low again. So, will it take 8 years between those two events? Right. So let's say mortgage rates bottomed in 2021. So is it going to be 2029 before we see another 4 years low mortgage rates? Who knows? You know, that's what I'm talking, like 3% range. But I think most people are probably waiting for something mid fives. Like I think the market changes drastically in the mid fives. And maybe not drastically is maybe too big of a word, but it's a noticeable shift where we can feel it, sellers can feel it, buyers sense that there's more people competing. So I think if you're a buyer, you want to buy now before we get into the mid fives. And if you're a seller, you fingers crossed, hoping we see rates come down at some point. But of course, sellers, like if you have to go buy something else, like you're going to be back in that buyer pool competing with other people. So it's always a double-edged sword for people that have to sell and then buy again. So something to take into account. It's like, all right, I'm looking at this now with one of my properties. Prefer not to sell it now, but if I can go out and acquire something in this market and I'm still in the market, I'm still going to get the appreciation when the market continues to appreciate down the road. So it's just a trade-off. We're happy to have these conversations and bounce ideas. By the way, there is no obligation when you talk to us. You're not, signing any agreement just to have a conversation. We're happy to just chat and bounce ideas and just see if we can find a fit for what it makes sense for you, whether it's buying or selling. Well, thank you for joining us. If you got a lot out of this, please like the video, share it with a friend. We appreciate that. And make sure to subscribe so you get notified when we post these updates. Again, what is this? We're on year 3 now that we have been doing this every month. We have not missed a monthly in, I forget if we just completed 2 years. Did we just complete 3 years?
I think this is the 4th January report we've given.
Okay, so 3 years, 37 reports in a row that we've had. So that's pretty good consistency there. So,
it'd be kind of fun, David. It'd be kind of fun to have a map of where you were, because you've traveled a lot more than I have on each of the reports. I've traveled a little bit, so just kind of fun. If you're interested in something like that, let us know in the chat. But we certainly do appreciate all of our viewers and clients and friends and associates and colleagues that have been with us over the past 3 years. And, thanks for your support.
Yeah, cool. Well, happy 2025 to everybody. We're excited about a new year and, lots going to be happening this year. So stay tuned and don't hesitate to reach out.
Thanks, everybody.